let's see. Hello, hello, hello. What's going on, Eddie? So what we're going to do is we're going to kind of get into some trade ideas. Obviously the market made a little bit of a run today. Now we're starting to get back into that retracement stage to where now we should be able to kind of hop in and hopefully start trading with this new kind of micro trend that's been created. And what we're going to do is we're going to swap over here to our charts and kind of look into this a little bit more. So, obviously I always start off with the dollar index. Obviously this is when market opened, this little gap here. A little move to the top side, and then from there we went ahead and dropped. So what I'm looking for in the dollar, in a sense, is this retracement pullback. And you can see on the 1 hour midterm, we have this moderate downtrend. These are the nice pullbacks, is when you're getting that, when it's kind of first happening. So what you're seeing here is we're seeing, actually let me clean this chart up a little bit. I've got so much going on here. Load, DXY, let's get a clean chart on here. All right, perfect. So you can see what's happening here is the 1 hour. We have that cross showing moderate downtrend, but one thing you guys want to look at is when you have this cross in that 1 hour, this crossing, or it could be a 4 hour or whatever, but when you're looking at this cross here, it's really strong when that 1 hour is kind of getting ready to overlap that big blue. Those are real nice areas to enter into the market. So what I'm looking at the dollar doing is pulling back, coming up to here, hitting this area, and then coming down to continue kind of like this little micro trend that's been happening. Kind of came down, retrace, come down, retrace, and then come down to make our new low. So that's kind of what I'm looking for. So with that in mind, we can look at like a Euro USD. You can see I've had this entry in because I didn't know how long it was going to take for price to retrace, but you can see, our 5 minute markets, we're in this oversold area. This is where we had our little run. So the market here is oversold. And then from there, let's just check 15 minute, just to get an idea of the market condition. So 15 minute oversold, overbought, 30 minute overbought. So right now our midterm market, our short-term market is all overbought right now. So that means that pullback is evident, but we did kind of, we broke out of this, kind of had this high, and then we kind of got stuck here, and then we finally ripped out of it. So to me, definitely looks like there's a lot of buyers in the market. So this breaking out of this top side, this trend should hold. But we know right now we need some form of a pullback. Our short-term market is really oversold. Now let's get into our 1 hour. So our 1 hour still got room to move, 4 hours still got room to move. So what we're looking for is, obviously price to pull back, and then we're looking to get into this trend, this micro trend that's forming off the 1 hour. So what I'm doing is I want a Euro USD to pull back, and then I'm going to buy. I'm not going to sell. I mean, you could sell the downwards move, but to me, you're going to have the higher probability move is when we get this bounce off that 1 hour moderate uptrend. So that's kind of what the move I'm looking for. And obviously, after we bounce, you're going to want to map out your 4 hour big blue, because that's what's going to be, if this trade's really going to trade out, meaning we may come up, hit, come back down, almost kind of create like a W. So where we kind of come up, we hit this, because remember, price naturally moves up off support, down off resistance. So we're probably going to come up, hit, come back down into the 1 hour, and then maybe start that run. So you always keep that in mind too, that you're going to have this major form of resistance once you break back below it to break back above it. So again, that first initial hit, we may hit it, pull back, and then hit it again, and then continue our move. So I'm looking at a Euro USD. On the buy side, off our 1 hour moderate uptrend play, I'm looking at USD CHF. I just got to readjust this real quick, but kind of the same story here. We kind of came down, retrace, came down. So I'm looking for this 1 hour play here where we can see, let's pull this down. I had this mapped out earlier today when I've been watching the market, because I wasn't sure how fast this was going to happen, but now I see that, market's kind of stalled out. So it's a good time to get this video out for the members, so you guys can go ahead and take advantage of these, later on in the session setups. And again, now you want to keep in mind, you're going to want to watch this, because if we get to say this takes hours to come, and next thing you know, price is here and the 1 hour's here, and if we're still kind of in this over bought area, I may cancel that trade because there's not a whole lot of retracement moves. So let's just say, it takes a lot of time for price to start its retrace, and the 1 hour is all the way down here. For an example, the 1 hour gets all the way down here and price is right here. I may want to cancel that trade because now there's no real room for that nice retracement. That's when I may come over and start looking maybe towards the 4 hour if the 4 hour looks decent. Like obviously a Euro or USD CHF 4 hour doesn't really look decent. So you want to keep that in mind as well. But as of right now, I'm looking at these 1 hour moderate downtrend plays. So you got Euro USD in the 1 hour. We got USD CHF, that 1 hour play. I was looking at, I believe it was GBP USD, but I thought it was pretty close. Let's see here. It's about 15 pips away. So I mean, technically you have this USD, so Euro USD, GBP USD, USD CHF are kind of the pairs I'm looking at right now. Obviously you can see I really don't have an entry pending on GBP USD. This is going to be something I'm going to watch, because what happens is you can see the dollar still has, let's measure it. So I mean, it could still work. So the dollar's about 15, 16 pips away from its 1 hour. So it could match up. Sometimes what happens is when a dollar's retracing, some of the other cross pairs, their 1 hour is a little bit closer to price. So what happens is I like to time it with the dollar. So meaning when the dollar comes and hits this, that's when I like to time it. So Euro USD looks good, USD CHF looks good. GBP USD seemed a little close. So all I'm gonna do is watch it as we hit, because what happens is to avoid some drawdown, this could come down, it can break through it a little bit because the DXY still has to come up and hit its. So on this one, I'll kind of be watching DXY and I'll be watching GBP USD to kind of time it. Now, if they kind of start to line up really nice, then yeah, I'll go ahead and throw the entry. But sometimes what I do is I'll see something I like, but I may not have the pending order there because it seems a little bit off from the dollar. And if the dollar is going to pull up, and let's just say the dollar, dollar pulls up here and GBP USD hits its 1 hour, but the dollar still has to come up here to hit its 1 hour, that means GBP USD is going to have some drawdown because the dollar itself hasn't found its true resistance. So, keep that in mind, kind of like a little tip and trick. But so that's kind of the idea for right now. I don't know if you guys are in something, want me to look at something. I know Eddie loves that GBP JPY. I'll kind of go ahead and take a look at this real quick, see what's going on in here. We got the pound yen. So here's kind of one of those examples where price, let's take a look at it. So technically it's not too bad because, I mean, we do have room to move up. So you could have that play. But let me just see something here. To me, I'm more like this 4 hour, just because I know sometimes, if the dollar's going up, GBP JPY is going down. And if we know the dollar's resistance is going to be that 1 hour area, that means the 1 hour play on GBP JPY is probably most not likely going to be your best bet. We're probably going to be looking around that 150.79 support and the actual 4 hour area. Now, if you can get a play where the 4 hour comes and the 4 hours overlapping this, then this is going to be a buy all day long right there. But as of right now, I'm not really feeling the 1 hour. But I got to watch the correlation here, what's been kind of going on with GBP JPY. Because technically, hold on, I got to remember this real quick. So all right, so how does this work again? So I think it correlates with the dollar. So I think if the dollar is, actually, let's just do this real quick. So we're coming down and the dollar was pulling down. So I'm kind of thinking if the dollar comes down, GBP JPY comes down because GBP USD goes up. So if the dollar is going to go up, GBP JPY is most likely going to go up. So technically, with that being said, you might get away with the GBP JPY 1 hour play. I mean, you can already see we're oversold. We've come out of that oversold situation. And we're coming right near that 1 hour to where we do have that top side room to go. And I mean, just coming up to the previous top side kind of make that M formation, that's 50 pip trade setup. So I think I may play with this. I just haven't really watched GBP JPY today. Just kind of watched the correlation, but just kind of looking at this move here, and then you can come to GBP JPY, and you can kind of see the similar move. So obviously, if dollar's going to go up, obviously in theory it looks like GBP JPY is going to move up. So you could possibly have that 1 hour play on the GBP JPY, and you can take it easily to the next high. Let's go back here real quick. Euro USD. To me, if it's going to trend out, I would look, if you're looking for take profits, I would probably look, if it's going to obviously trend, I would actually look, just use your institutional support levels that are already mapped out for you. You can lock in profits, you know what I'm saying, right at that red, and you're looking at like a 50, 60 pip trade setup. You can also do, say you kind of want a swing trade, you could also, because we're early on in the week, good week to be trading, all the crazy, there's no matter what, there's still risk data being dropped, but it's not like the first week's data. That first week data really kind of shifts the market. The rest is just, it is what it is. So the other way of looking at a Euro USD is you can kind of see what happens here. Obviously, we should bounce. And to me, I'd put a slip and play, lock in profits, because say you want to swing it out and see, when we bounce and come back to retest that 1 hour area, if that 1 hour holds, and then we can possibly start looking, towards the midweek, end of the week, getting up in here, and there's a 150 pip trade setup, getting up to that top side resistance. But we'll see, because in theory, again, dollar still has not been trending. Like you pull this back 4 hours, we just kind of got these micro trends. Like here's a nice trend, you know what I mean? Nice little trend, nice trend. All we've been dealing with the dollar is kind of this funky chop. So, it's past 2 weeks, it's been kind of annoying trading US-based pairs because we don't really have this trend. But, just looking at this, if we're going to come back down here or in these areas, that could put Euro USD up into that 150 pip possible trade move. But I'm going to be trading a Euro USD, so if anyone gets into this Euro USD, I'll be managing this trade. So if you're in it, let me know you're in the trade, because then if we're trying to swing it, what I do is I like to swing my trades. I spend a lot of time on the charts, so I'm here so I can kind of manage it. But again, if you're just looking to get in and get out and get your money, just set up your easy trade. Set up your buy, and there's your take profit, this first area, because no matter what, price is most likely going to bounce here, stall out. So why not lock in your money, especially if you're beginning trading? The object is you don't want to hold trades. You want to get in, get your money, and get out, and then get into the next trade, get in and get out. You just want to slowly start building your account. A lot of times as people try to get 150 some odd pip trades, you get into the trade 50, 60 pips, you let this thing retrace, 45, 50, 60, 70%, and next thing you know, you're only locking 15 pips in because the retracement kind of pulled back hard. So I would say for a lot of my members is, your entry off that 1 hour and then take profits on the top side resistance that's on your chart. Because then look, you can always get back in. We know price naturally moves down off resistance, so we should come here, hit this, and pull back. We pull back, just analyze. Go to your 1 hour, 4 hour, and you'll know where your entry is. So that means you get in, you get your 50 pips, you lock it in, you got the money, and then now when the trade starts to set back up, boom, you're in, and now you're taking it up to here. So all you're kind of doing is you're swinging it, but you're breaking it up in pieces. You're breaking the swing in sections. So instead of just being in one position and then trying to just go ahead and get that 150 pips or so, you can trade it in sections to where you get in, you get out, lock it in, it pulls back down, you get back in, and then you take it there. So you're still getting that 100, you're still getting that move, but you're breaking it into sections and you're locking in the actual money, okay? So that's what I would do for a lot of the traders, because look, worst case scenario, let's just say the swing doesn't really want to work out. You get taken out 15 pips, you still have profits. Vice versa, you're holding the trade, you're not really at your charts to really manage the position. So now what happens, we hit this, it pulls back, it breaks the 1 hour because maybe it wants a bigger retracement, or again, dollar's not really trending. We're kind of in this funk. So, maybe the dollar just wants to go ahead and pull back, because you can see like this little section that we're near here is right around here. So meaning, yeah, we can pull back and then come back down here, and then next thing you know, pull all the way back up topside again. You know what I mean? The dollar's in this really funky trading chopness. So right now I wouldn't look to hold unless you're at your charts. So meaning, to me, I hold because I'm at my chart. So what I can do is I can easily get out. If I don't like the way things are looking, I can easily get out to maximize my profits, vice versa. Somebody else who's not sitting there hardcore at their chart, you know, you get in, and the next thing you know, we hit this area, and next thing you know, price pulls all the way back to here. Time to get your charts, you're way back here, practically to where your entry is, and now you're only locking in 10 pips. You know what I mean? So I would say is lock the money in. You know, we get in here and take this top side, and then just trade it in sections, meaning when you really get good at reading charts, you should be able to see, you know, what the future is going to bring, what's going to happen in the future. So to me, I'm already seeing the map. I'm seeing price come down here, I'm seeing price coming here, and then I'm seeing price bouncing here, and then after here is going to let me know if we're coming up to here in theory. So that's what I would do, is trade it in sections. So you're guaranteeing your money. You know what I mean? You're guaranteeing that money. Where again, a lot of people will hold trades. Oh, I'm going to get 150 pips out of this. Oh, I'm going to get 200 pips out of this. They hold it, and they could have had 60 pips out of it, and now they're only walking away with 25, 10, 15 pips because, you know, it hit. They weren't really reading the market, knowing that we're not in this really trending market. We're in a bunch of micro trends within you know, dollar cross pairs. These micro trends, not true trends, micro trends, to where, you know, someone who bought here is thinking, hey, this trend's going to continue. Yeah, we're really going to start trending. And look what happened. We came all the way back down to where we started that upwards movement. You know what I mean? So these are micro trends. So we're not really in a full-blown trending market just yet. So you always want to be aware of the type of market condition you're trading, because what happens is you're gauging 150 pips when the market's in a micro trend, and it's only going to give you 60 to 70 pips. So here you have your stop, you have your take profit, you know, goes 60 pips, and next thing you know, it comes all the way back to your entry, and you're like, well, what the heck? Because you're not truly understanding the market that you're trading. So right now we're in these kind of micro trends. You want to understand that, to me, don't try to hold these long-term positions. Trade the positions up in chunks. So if you're looking at, well, shoot, I can go from here to here, 150 pip trade setup, trade that trade setup in chunks. I mean, I go from here to here, lock that money in, and I buy the dip. Price bounces, I get back in, buy the dip, and if we can break this area and come higher, great, cool. I add that up. I made from here to here, but I secured my money. I traded it a lot smarter. I traded this swing move. I traded in sections, and I traded it smarter than just kind of getting in and hoping it goes there. Okay, so that's kind of what I'm looking at for right now. Let's see here. GBP, JPY. What's this DXY doing real quick? Because I'm almost thinking about triggering this this GBP, JPY trade. Because you can see what I'm what to do. The easiest way to find correlation real quick is drop your chart to a 1 minute chart, and then go to GBP, JPY, because you have movement. You see what I'm saying? So in a 1 minute period, if this jumps upwards and then GBP jumps upwards, then I know the correlation is their what would you say? They are converging with each other. They're doing the exact same. So I dropped this to a 1 minute chart just to get an idea, and we'll kind of see here. Only thing I don't like here in the 1 minute chart DXY is you can see stochastics. I got plenty of room to move down. That's why I'm not really hesitant to really hop into this GJ, because GJ, no matter what, it's completely oversold. But again, it's a 1 minute chart, whereas DXY still has plenty of room. We all know GJ is a very volatile pair. So that means if the DXY, say the DXY wants to come back and really get into this oversold situation, well, that means GBP JPY is going to blow through the 1 hour. You know what I mean? That volatility is going to blow through that 1 hour. So again, these are tips and tricks to help you really set up, to really be able to analyze the market, so you can really kind of get these, you know, exact trades. But you can see that it's kind of really nice just to see how it just bounced right off of that. But again, I'm being a little bit more cautious just because, again, if this GBP JPY is corresponding with the DXY, so if DXY goes down, GBP JPY goes down, well, I can see GBP DXY has plenty of room to move down. That means this 1 hour play is not going to be the best play for this. So knowing that, so if we kind of rip through it, what I'll probably do is I'll look more for, maybe around this 1 hour, or coming to test this this steel blue. I'm sorry, the institutional support area, making a play off that, just because I'm not really feeling, now if DXY was matching up stochastics wise with GBP JPY, so meaning they're both in an oversold state, and then now we're definitely going to get that nice bounce upwards, I'd feel a lot more confident hopping in off that 1 hour in GBP JPY. But as of now, I just don't like how, the dollar right now on the 1 minute, it's below the big blue, and we still got plenty of room to move down. So that's the only thing I'm not feeling. You can just look at this makeshift, like you say, makeshift support, because I don't really know what's there. Actually, I could probably figure it out. Let's see here real quick. So we got this makeshift support area. Pretty much it's just a previous low. And again, just look left. So say sometimes you just do a makeshift support area where, it's not really moving average derived. It's not support and resistance. It's not Fibonacci 50%. It's just you're looking at the previous low and you're dropping a line there. Look left. You know what I mean? So I dropped that here and I'm looking left. Look for the price actions. You can see, boom, we hit that. We hit that. Boom, we came here and hit that. So you can definitely see that it's been, you know what I'm saying? Boom, we hit that, pulled down. So it's definitely been a very well respected area when you look left. You know what I mean? We kind of came close to it, pulled up. So that's what I like to do is when I kind of just draw my makeshift support area when there's nothing really there, I like to just scroll back and look left. Go back a little bit and just see if there's really nice price action near that area, because that lets you know, hey, that area is strong. I mean, look at that, came and hit, boom. So to me, you know what I mean, even that, boom, boom, boom. There's a lot of price action when I look left around that area. So it's a decent area, and it's probably a 50% retracement if I really wanted to go and look. But those who aren't really comfortable with Fibonacci and doing all this and doing all that, just do the look left test and look for price action. And then bingo, see, it's pretty close. There's your 50% there. Let's see here, a little 50. So it's pretty close to a 50. But yeah, just do a look left test. You know what I mean? And don't just look left on your screen. Pull this back, like you saw me do. I pulled it back and I just kept looking and looking and looking. And I'm specifically just looking for price action. I'm looking for price really respecting that area, and you can see that price was really, really respecting that area here. So this could be the pullback area, meaning price could start its retracement here. You know what I mean? So let's go back, kind of seeing that. So what I'm going to do is, a half position. So sometimes too, when I see something I'm not fully confident in it, I will cut my previous lot size in half, because now I'm beyond. I take my risk tolerance and then I cut that risk tolerance by half, because now instead of going in a 1 point lot, I'm hopping in. Ooh, I just totally screwed that up. Let's close that out. Boom. There you go. Even me been doing this for years and I totally screw up. So that just cost me, I don't know, 50 bucks or whatever, 30 bucks. I wanted to do a buy and I did a sell. So I'm going to do it right now. I'm just buying that market, putting that in there, but it's half my position. So what I'm doing is, because I don't really like the setup, but half my position, I could, if I wanted to, cutting my position in half, now I can go ahead and really stretch out my stop, but I'm still not going to. I'm going to go ahead and just keep, 15, we'll keep, me, I was about max 20. I'm still going to cut that in half at 14 pips. Well, not half, but I cut my lot size in half, and then I'm only using a 14 pip stop. So I'm really keeping the risk extremely low on this. So if it doesn't really work out, it's not that big of a deal, because now I literally totally just changed the way my risk is within this market. And then on top of that, I can always add to the position once this wants to start, kind of playing friendly. Once we really want to start to move, I can go ahead and add another, 0.5 lot, or, add a full standard lot once I kind of get better confirmation on this pair. But what I did was, after doing that look left test on my DXY, this area of support seems very sufficient with our being in this overbought or oversold short-term market. It seems like a very sufficient area for price to start its retracement. So I feel confident. I feel okay. Not full blown. If I was full blown confident, I'd be in a standard lot. I cut the lot size in half because it still looks like a good position, but I didn't like it fully. So all we did was just manage the risk. You see what I'm saying? That's how I just literally manage the risk there. Meaning I see something I like, but I'm not fully like, yes, like how I like, Euro USD. It's got a pending order for standard lot. USD CHF has a pending order for a standard lot. I like those setups. I like them a lot. Whereas the GBP JPY, I liked it, but there's still some things kind of telling me I don't know. So all I did was manage the risk. Cut my normal lot that I entered the market in. I cut that in half. So now it's a less riskier trade setup based off what I saw in the market and kind of didn't like. So that's kind of what we're doing. So right now, I'm in a live GBP JPY, and then I have my pending orders for Euro USD and USD CHF, and that's kind of that. So I guess with that being said, obviously I hoped, for my members, I hope you liked the video. I hope you're able to not just use the video for the trade ideas, but use the video to figure out how I figured out these trade ideas and use it as a training video. You know what I mean? Because what's going to happen is that's not how you get your tips and tricks. Sometimes it's hard to just, like, I'm still trying to make advanced content, but sometimes I got to wait for the market to kind of be there in a sense. So sometimes just when I see something doing this live real quick, you're still able to kind of get some more advanced ideas and just different little tips and tricks based on, kind of what we're doing here. So I guess we're going to leave it at that. So what's going on with gold? I haven't traded gold in forever, but gold's probably the same thing. You know what I mean? It's that retracement. Still, you know what I mean? No real trend here. Micro trends. You kind of got this weak, moderate uptrend here. I say weak, it's just because you can see how close everything is. See how close all these moving averages are? It's you know what I mean? I like when they're, nice gaps separated. It gives you just a stronger, like a stronger idea in a sense of kind of what's going on in that market. But either way, that's kind of what I'm looking at. Let's look at this Euro JPY. It sucks too because you can see I have so much stuff lined up, but like I get so busy and doing other things, I sometimes don't get to take advantage of it. But you can see I had that lined up there. The drawdown literally on this, if I wanted to short it there, was 5.6 pips. And obviously we would have locked that in. That was easy 34 pips. This is what I love about the setup. Accuracy. Low drawdown. But you'll see that a lot of times. A lot of charts all marked up. And then I'll come back and look. I'm like, damn it, that shit hit perfect. And I totally forgot I even marked that chart up like that. But, it is what it is. But, so that's what I'm looking at for right now. And that's that. So, let's see. Here's anything else interesting. I mean, look at that. That was that Euro GBP setup. I mean, you're talking to a T, bro. You can't. I mean, that's as accurate as your entry can possibly get. That's as accurate as your entry can possibly get when you're just boom, just like that. I mean, that is dead on, dead on. But I don't know if there's any questions. If you have any questions or anything, you can let me know. What is this person saying? Hold on. S&P 500, please. S&P 500. All right, so S&P 500. I mean, to me, it's S&P 500. That's why I love our trade setup because we can literally put our trade setup at anything. I've actually been studying some Russian stock markets. I have my trade set up on that as well. But I'll go ahead and do the US 500 real quick. Something different. But just to show you how diverse our trade setup is, it makes it, to me, it's trading stocks with our setup is easier because stocks are less volatile. Looks like S&P's been really volatile lately, though. Look at that. It's a nice, at least on the 15-minute wise. Let's go here real quick. Let me just get an idea of what's going on here. So we're going to see here. What I'm doing is I'm just kind of mapping out these areas. So you can see on the daily, we're in this moderate downtrend. So to me, I probably, if you can, I'd probably sell the S&P 500 right at that 2657.293, which is our daily moderate downtrend. I'd probably sell that right there. Plus, you almost have the weekly overlapping where we are monthly. Okay, we got a monthly support way down here. Let's bring this back. 1 hour. 1 hour chilling. And let's just look at 5 minute real quick. Yeah, 5 minute. I would go ahead and sell the S&P 500 right around that 265793 area. Overbought 5 minute, 15 minute. What does 30 minute look like? 30 minute almost there. We might start poking ahead into this overbought situation when we get to that level. But short-term market's pretty oversold. But I'd be looking, you can even see, I mean, you could see this area here. And what's crazy is that most people would just use, support and resistance, where I went straight to my moving average, and then I could look left, you could see, boom, boom, boom. We're coming back up in an area again. This is the daily. So again, I would probably short it right off that daily strong downtrend. It looks real nice. It's a moderate downtrend. Looks nice, and I'd probably take profits. Let's see what we got here. Profit wise, will probably be in that big blue. Well, technically, I would watch around this area because you could see midterm. So midterm trend starting to shift. I got purple above white, so starting to show you this moderate. It's very weak though. A very weak shifting trend midterm market on the 1 hour. So if I was selling here, I would be watching what happens here. So meaning if we can't break this area, then I'd lock my profits in. We could break this area, then I'd let this probably come on down to the daily and then take that money. So yeah, I'd watch this here. And depending on where it really does, because we got that purple almost overlapping, depending on what the short-term market looks like, let's just say, okay, price is already falling. You could look to buy up into that daily. So meaning there's two ways to trade it. So depending on what it's going to do, if it's going to keep dropping, I might have to buy on up into the daily, lock profits in, or if this is just a short-term little, retracement in a sense. Let's see here, 15-minute. What's 15-minute look like? Meaning come to the 15-minute, and if we bounce off the 15-minute into that daily, then obviously I could just short it. And again, it's going to be this kind of mid area here. Do we break it or not? If it doesn't break, lock the money in. If it breaks it, let it take it on down onto the daily big blue, and then obviously if you can break that, you can hold it, and you can possibly look to getting on down to this monthly area. But obviously I don't like getting way too ahead of myself, because a lot of people, they'll like to forecast 300 pips, and I always feel as if it's too hard to forecast 300 pips out, because if I'm buying and I'm forecasting 300 pips out, there is so much topside resistance you're going to have to break. So what I do is I forecast to my nearest resistance areas, and I see what price does there. Okay, great. We break this area, now we're on to this area. Okay, we break this area, now we're on to this area. So you're never going to see me forecast 200 pips, 300 pips out, just because I don't believe in it. There's so much support or so much resistance in between that 200 pip run that needs to be broken. So for someone to really truly say, hey, that's what it's going to go, it's more of a guess, and they're hoping. That's why sometimes you'll see these traders, they'll be in these swing moves, they'll go 150 pips, instead of locking the money in, they'll float it. Now this thing comes back down 100 pips, you know what I mean? And it takes 3 weeks for them to finally hit the 200 pip marker, where if they understood how the market worked, I could have traded that in sections, and in time we hit that 300 pip market, I'm 600 pips. So meaning they made a total of 300 holding it for 3 weeks. I made a total of 600 trading it in sections, knowing exactly, well, hey, we're probably going to pull down here. Boom. Okay, we're probably going to bounce off here, and boom, boom, boom. But that's what I look at the S&P 500 is that area. And, if you break, you still got that 4 hour there. So those are kind of the areas of interest. Would be, between here, between 265,793 and 26766 is where I'd be looking to sell the S&P 500. It'd be between here and here, because I got the 4 hour big blue, and I got the daily moderate downtrend right there. If anything, what I do is I do daily moderate downtrend, keep a tight stop. If I do get taken out with the tight stop, hold, because I got a second chance to get in here, sell it on down. And you know what I mean? That's why I like tight stops, because you can always make a little loss back. It's very hard to make a huge loss back. You know what I mean? But a little loss, you can make it back easy and quickly. A big loss, now you're stressing, now you're chasing, because now you may, just depending on how people trade, one big loss may take 3 or 4 or 5 wins just to break even on that loss. But that's how I trade it. I give the daily a test, tight stop. If you don't get that nice repulse off the daily, we'll kind of break through. Then from there, I still got my 4 hour next play to go ahead and hit. But that's how I trade the S&P 500. But to me, that daily looks good. You can see last time we came in that area, this thing dropped. Obviously, this is probably news related. This is probably, you gotta understand too, there's a lot going on within, there's, they're not saying trade war, but there's kind of like a trade war going on with, tariffs between China and America, China and America tariffs. So that's really kind of throwing a hamper into the stock market right now. So you got to also keep those fundamentals, in mind as well. That's where a lot of these, because normally the stock market's not this volatile. Normally, in the past, the S&P and all these other stocks are just slow moving, easy to trade. But you can see recently, you got a lot of volatility, just violent moves. Obviously, this is due to what's going on politically. So you obviously got to keep that in mind. But either way, with that said, these are the trade ideas for right now. And kind of keep an eye on it. And you can see right now, you can see what happened. What I was thinking was going to happen on the GBP USD, breaking that 4 hour. Breaking that 1 hour. Again, this is why we went ahead and lowered the risk, put that lower thing on. So that's kind of what's happening there right now. And obviously, if you watch from the beginning, you pretty much saw me explain why I didn't really like this GBP JPY buying right off that 1 hour off the get. But wanted to show you, for my members more or less, wanted to show you if you do want to see something, you do want to trade it, but you're not fully comfortable in it, showing them how to lower the risk, lower your lot size. Because even though I'm taking an 8 pip hit right now, I'm not taking an 8 pip hit on a standard lot. I cut that in half because I wasn't really feeling the way that this was set up. You know what I mean? I wasn't really liking it. So that was more or less, I guess, a paid lesson, you'll say, for my members. But either way, I won't hold that because, again, it's I got low risk in there. I'm not really worried about it. The trades, though, I'm waiting for, again, is going to be the Euro USD and the USD CHF. I'll be keeping an eye on these, again, because we're late Asian. So, again, this 1 hour could come down so quick. And if our 5 minutes don't really kind of pull up out of these areas, I may cancel these trades in a sense, because we may go ahead and be able to break those areas, and we may be looking for these 1 hours and so forth. But either way, I'll keep an eye on it, and we'll just kind of take it from there. So, with that being said, I think we're going to leave this where we're at. Few trade ideas, few nice little learning lessons, obviously for the members, because you guys have the actual trade set up, so you know what I'm talking about when I'm saying purple, big blue, and so forth. But we're just going to keep doing what we're doing. I'm hoping to get our trading room set up this week, and maybe we'll do some little test runs just to make sure everything's running smoothly, and then maybe next week start the actual live trading within our trading room together. So so hopefully that gets done and we can start doing that. But either way, guys, I will talk to you guys later. If you have questions, obviously you know how to reach me, send me a message, and we'll take it from there. So until then, obviously happy trading, and talk to you guys soon. Now I just gotta figure out how to turn this off. There we go.